Hello, Maverick traders. Welcome out to your market roundup for May 8th, and let's get into it. Not too much happening today. If you look at the results, pretty much flat. Dow and S&P, NASDAQ, Russell all flat. Oil had a bounce back day, up about 2%. Gold flat. Gold was down big on Friday. Markets up big, and that was really a turning point. That was a key level that the S&P held on to, and gold looks like it had a false breakout from false move come fast moves. So that's a little bit of a change there where I think some of the safety trade, gold and crypto, those things look vulnerable to more downside. And that suggests good news, good things coming for markets in my view. So over the weekend, we got markets analyzing everything that Warren Buffett, Charlie Munger, and the guys at Berkshire Hathaway were saying with their annual meeting. And then it's a little bit different. You would think that a run on the bank would cause bank stocks to have pressure. Instead, the bank stocks are coming under pressure, heavy shorting and so on, in basically could spur a run on the bank, right? You would think that the run would come first. Instead, it might be the bank stocks under pressure. And I think that's what market participants are betting on, is kind of saying, well, if we can pressure regional banks hard enough, people will go run on those banks and it will come true. So there's a little bit of a trade there where they're trying to hit those stocks hard and make it, in essence, a precursor to that run. Advanced decline line about half and half today, but interestingly enough, the 50-period moving average has improved pretty well over the past week. We were down in the 30% of stocks above the 50. It's now gone to 46. That's a pretty big jump in just a handful of days. So that holding at support a couple of days ago in the S&P was critical, and it looks really bullish. So here's the chart pattern. We identified this cup and handle here. It immediately spiked, but then it gave all those gains back. And at the end of last week, it was at that make or break level. Well, it made, right? Huge jump on Friday. Today, an inside day. That's the most common candle after a big upside move. But ultimately, from here, you'd normally break out to the upside. So anticipate more of that to follow. And if you look at the NASDAQ, it already is breaking out to the upside. You can see is above those highs. So expectation is that that's leading, and it's Apple's, Google's, Amazon's of the world that are pressuring the market higher, and the NASDAQ is leading that upside push. If we look at the heat map here, of the big names in tech, Google and Netflix higher, but ultimately it was just kind of a quiet day. You see a lot of light green, light red, not a lot of big movers on the day, just little things that had stock specific or company specific news, but ultimately just a quiet kind of sideways period. I remain bullish. I think that the upside breakout is coming in the S&P and has already started in the NASDAQ, and the underlying breadth, again, is starting to improve. More stocks above their 50 MA, pretty good increase over the past week. So let's look at some bullish and bearish candidates. International markets look pretty solid when compared to U.S. markets, and you can see here Barclays has held on that little retest and is now bouncing, and I think this should have more upside, should have more pressure moving higher. You can see the bullish crossover 20 above the 50. I think this is basically that retest of that zone, and now we start to break out again. So Barclays looks good. I don't normally look at stocks that are lower priced, but we highlighted Oscar last week, and that stock's up nicely and sharply. So we'll go back to it one more time. Japan ETF, we highlighted this one last week, and it did indeed break out to the upside. I remain long. If you're not long, I think you can get long. EWJ, I suspect, still going to continue to lead. Strong market environment there. And then Royal Caribbean, not the first thing that would come to mind of what would be breaking out to new multi-month highs, but it is in fact doing so, hitting overbought conditions on the RSI, which is a short-term bullish indicator. So anticipate a little bit more spike. Now, if the volume surges on one of these days here in the next couple, that would be your signal, and it could happen tomorrow, it could happen the next day, but I'd expect a big spike, higher, and when that volume surges, take a quick profit. On the bearish side, Deere ultimately kind of a symmetrical triangle, but in a bearish market environment, and I suspect is more likely than not to break to the downside. But I do have to say, since I'm bullish on markets, I'm not in a hurry to go out and short this or any other names here. I much prefer to have my portfolio skewed bullishly. That's what I have, and that's what I'm sticking with. Mosaic, we highlighted this one a time or so ago. It has broken down, broke below support levels here, kind of that inverse cup and handle type of idea has been broken. And again, expect more downside pressure is coming in Mosaic. And then last but not least, we've got Prudential. We highlighted this one here actually and said on a bounce, we'd like to get short. And that was really well done there. And I think this bounced back underneath this old support, new resistance. This is another place to take a shot. And these insurance companies, Prudential, MetLife, they're just not trading well for the most part. So Prudential looks like another leg to the downside. That cup and handle is intact. I personally would continue to have more bulls than bears. You can pick on some of the weaklings, but this is a spot where I wouldn't be surprised if the market doesn't go sharply higher. It has the potential to really take off. Now, a word of caution. I'm continually watching for that big blow off top. If the markets do in fact break out and go on that run, I will be watching for signs of exhaustion, huge upside pressure, big volume spikes on quote unquote good news and so on. If it gives me that big blow off top scenario, then I will take down a lot of the bulls and really change things dramatically. But until that time, I think that's the path of least resistance. We've got CPI on Wednesday. Inflation numbers are watched carefully. If inflation continues to trend down, that's a good sign for risk taking. And in the short term, for the next few months, there, not this month, but the next 2 months after this, there's some huge CPI numbers that come off from last year. Remember, CPI annually is just a rolling 12-month number. So when we get rid of not this month, but next month and the month after that, both had monthly CPI over 1%. So we'll get rid of some big CPI numbers in the next 3 months. And again, that trend should be what markets are kind of pricing in right now. Less in the way of Fed rate hikes coming down the pipe, the possibility that they might even start cutting, and ultimately, most importantly, inflation is trending lower. Airbnb, Disney, EA, Oxy, Roblox, plenty of companies across a diverse quantity of sectors reporting earnings. Hope you enjoyed the market roundup. Have a great rest of your day, and we will see you next time. Goodbye, everyone.